so the equities market's still affected by bearish sentiment, still an underperformer, but at least trading in the red, in the green today.
Yeah, because the prices, as we've said over time, are quite attractive. Main issues are that liquidity is actually very tight in the system. Despite good results from some companies, like I'm sure you've heard of what First Bank did yesterday, an addition of about over 10 billion to profit made at this period last year. People are beginning to look at these stocks once again. I know that the stocks that did very well today have to do with the brewery sector. Nigerian brewery and Guinness did very well today. Flour mills also did well.
Okay.
With IBTC.
What's happening on the What's happening on the fixed income side? We're told that Treasury bills are looking quite attractive, but they've risen significantly on the back of that very aggressive MPR hike.
Yes, since the MPR hike, we've experienced a drop in price, which I would refer to as drastic. On the bonds deck since Monday, we've seen 300 basis point increase on bond maturities. But the issue here is that on short and then long bond maturities, we have same yield trend between 16% and then 16.6. We expect a correction. It's either that the yields on the short end go down or the yields on the long end will continue to go up. And so there's still this atmosphere of cautiousness. I mean, not just in the fixed income market, even in the stock market, like you've seen. People will buy and then wait for some small margins and then sell quickly. The confidence is not just there yet. But with what CBN is doing, with some time when things settle down, you will find out that when investors see the direction clearly, they would be able to go back into whatever positions they want to take.
Right. Okay, so a little bit more price discovery then on the bond side. Now, Treasury bill issuances over 160 billion naira, but they're undersubscribed because the market is not liquid. Now, the rising yields, it's argued, should help to boost tradability and hence liquidity, but it's not happening.
Okay, the rising yield makes it very attractive, especially for foreign investors who have low yielding securities in their place. We expect the FDIs to come in. I mean, we don't expect so much because of the inconsistency in policy for now, but we expect them to come in, those who have very good risk appetite. And then on the local side, illiquidity is the problem really. You don't want to, I mean, cost of funding has also gone up, and then you can actually place at the money market, so and then get as at 2-3 days ago up to 18%, even though this has dropped today. What would experience is that CBN has acquired, or sorry, bought some bonds back from some AMCOM bonds that were issued before, back from some rescued banks, and then this has pumped liquidity into the system today. Basically, going into next week, we'll see a clear direction of how things will be. But right now, there's still some level of uncertainty of what might happen, what CBN may do. So I think it's still a process ongoing, basically.
All right, now give us a few of the differentials. You know, we've been talking about the bond markets. What's happening on the money market side? Because apparently there are also issues around illiquidity.
Okay, a total of about 1.3 trillion actually came into the system. It has to do with buyback of bonds that had been issued into the system before. So money has come in, but the system was at about a debit of over 800 billion as at yesterday close of day. So we saw rates, overnight rates, and then OBB dropped today, basically. I know that it was a very, very active market in the money market. What this might cause is that will be that people will come back to the fixed income market where yields are still quite high. Activities and trade on the fixed income market, short and then long end, was actually reduced today. We saw a lull in activity because of that news coming in that money had come in, and then people would try to grab as much as they can of high yielding securities.
All right, now, one of the biggest problems in Nigeria in the last few months has been the reticence of foreign investors and also the reticence of local investors. Now, it's argued that with yields becoming a little bit more attractive, we might see pension funds returning to the market, and then in the long term, we'll see foreign investors looking for higher yields in emerging markets coming to Nigeria. What sort of time frame are we talking about here? How long does this market have to wait?
Okay, basically the yields have responded, I mean, for the first time in a long time to MPR this way, because it seems it's a long-term strategy, because the CBN governor is taking a proactive step to prevent further inflation based on the things that we expect to happen. Government steps towards removal of subsidy and then cost of living going up, basically. So he is hedging against that already. And so this doesn't seem like a short-term strategy. Basically, when things settle down, like I said, you'll find investors being more confident to take positions. But even today, we saw some people buy some high-yielding securities. Of course, they're probably feeling demands for interested customers, especially those who are offshore.
Right.
Basically, a local dealer won't take so much position because of possibility of further increase in yields and so on.
Okay, very briefly, Bankole, September inflation came up higher than what we saw in August, back at around 10%. Is that the new trend? Are we going to see a reversal of some of the gains we've seen in terms of improving on inflation?
Yeah, we will still have to watch that very carefully, because it's kind of strange that we've seen increase in policy rates, but inflation trending back up. Basically, I think it's a cost push kind of inflation. Cost of living, I mean, of food, cost of food that we import has gone up. If you watch international news, we'll find out there's been a lot of flood and all sorts of other natural disasters happening in places where we bring these commodities from. And so we import these costly items, and then we're not reducing our imports at all anyway. And then basically, this has affected general consumer price index. That increase is still not the most significant. So just like I said, we have to watch that very carefully.